All right, good morning, everyone, and welcome to the Ninjacators Morning Bell with me, Richard K. Let me know if you can hear me okay, and as always, if you've got any questions during today's session, let me know in the chat box, and I'll be more than happy to answer them for you guys. Right, before we dive into the charts, let's quickly discuss the current economic news events. As we all know, the US Congressional Elections took place yesterday. Votes still currently streaming in. Pretty tight race between the Democrats and the Republicans. Not sure how that will turn out, whether that will have an effect on the markets. Other than that, for today, we only got crude oil inventories at 10:30 a.m. EST that might influence the obviously crude oil that we've been following in during these sessions. And again, looking forward to tomorrow as well, we got the core CPI figures month on month coming out, measure of inflation. So that might be a high impact news event. Again, this might actually set a tone for the near term direction in the indices. Whether they will go up or down, again, we don't know. They are forecasting a slight decrease, although that's been forecasted during most of this year's actual CPI releases, and they all came in higher than expected, if I can say that. So yeah, we'll just have to see how things play out. And then, as always, we'll just look at the markets and yeah, see where we are in the bigger picture of things. Right, here on the ES, since Monday's session, I was saying that price was approaching or at an area of resistance, which is angular resistance, and this green line that's sloping downwards, which is a lower median line of a pitchfork that's been tracking this entire decline on the ES. We've done a similar thing on the NQ, which we'll look at after the ES. Previously, we had a confluence zone here where price bounced from a long-term median line or center median line, which is this purple line over here, and this red warning line of this pitchfork tracking this current decline, which I still believe is corrective in nature, and I still feel is potentially incomplete, meaning that at some stage where the price is going to go higher now or lower from here, I think we'll know as soon as after these votes are counted. And tomorrow's CPI data, whether we're going to first see another high or price is going to just start moving strongly lower again to potentially then complete a larger WXY, or what we call a double zigzag pattern, which I think is still underway on the ES. Price has beautifully followed our projections since we started these sessions, so I'm still sticking with that until I get proven wrong. All right, so this bounce that we've had recently, we were expecting for quite some time, and yet again it happened after price reached the low red warning line within a zone we identified before and bounced higher again. And I was at that stage saying that we could potentially see a much higher bounce, retrace a decent part of this previous decline. From the Fibonacci retracement side of things, price only retraced to around about the 50%, but it failed to reach this dash median line on the top here, which at that stage was around about 3,953. Currently would lie, oops, I just have to get rid of my magnet mode here. Now where's that line gone? Here we go, sorry about that. Above today's current price at 3,000, or sorry, today's candle at 3,940-ish, 3,950, give or take. That being said, there was two sort of interpretations that if this is some sort of relief corrective bounce to the upside, that it potentially was a WXY pattern, which is again a double zigzag where you have an ABC WX wave and then another ABC to the upside. I'll look at the 4 hour just after this to clearly show what I've been looking at. And we're anticipating a potential high. Now, I did fall short of that resistance zone, and price obviously consequently moved way lower again. And where did it pull back into and find support? Again at this median line, or the center median line of this long-term pitchfork that I've had on my chart since we started these sessions. So yeah, price is pretty much, or should I say the ES, it's pretty much at a decision point here. The question still being, was this just a corrective bounce? And that's over now, and we're going to see the next leg finally move lower, or are we still going to move higher? So I think we'll, again, like I said, know as soon as tomorrow, or after these votes have all been counted, and also the CPI data. So yeah, price currently to the downside might find support at the 3,796 sort of area, and that is again at this lower green median line sloping downwards. But yeah, it's quite a bit of a range between this centimeter line, this purple one, and that upper one over here, although price broke above it. But we might expect a little bit of sideways movement until the CPI data gets released as well. So to the upside, if we do move higher and break these highs, then I'll have to change this count from a potential WXY corrective pattern to potentially a leading diagonal for a potential A wave. And whatever's happening now could be a B wave. And then we see a higher C wave complete. And then at a later stage, see that last sort of final decline appear, which could take us into the end of the year, and potentially as low as the 3,100 to 3,300 sort of an area. So that's what I'm still looking at. Let's quickly have a look at the 4 hour before I switch over to the NQ. Let's just give that a little while to load. Obviously zooming into price a little bit here. So assuming after price reached this area that we expected a bounce to potentially happen from, we had a 3-wave structure which looked a lot like just a single zigzag, one of your most common corrective patterns. Price moved lower, and then after 3 waves, failing to obviously move to new lows, we made another high. And at that stage it was saying that if this wasn't an ABC, obviously it failed, then we could potentially be seeing a WXY, another ABC, and then see this pattern fail. So for those who are unsure of what a double zigzag looks like, you normally have an A, a B, and a C, conjoined by the WX axis, followed by another A, B, and C, for it to potentially end and then move lower. The alternative is, and I still think it would be corrective even if price breaks above these previous highs, was set on, when was this, beginning of November, that this was potentially a leading diagonal, like I said. All right, potentially being a 1, 2, a 3, a 4, a 5, some sort of an A, B, C, and then another move that could potentially mimic in height this move to the upside. Doesn't necessarily have to be another WXY or corrective sort of look, or not a corrective look. It could just be a straight strong move back to the upside. So that could then potentially take us into this previous area we've been looking at before, which in this case be slightly a bit lower. I can't really label that now, because by the time price does get up there, if it does get up there, then obviously because this angle is dropping lower, the price will have to be adjusted continuously. So basically what I'm trying to say here is that we could very well fail from here. That might have been the corrective bounce that we've been anticipating, then see that final strong move to the downside. Or if we do make another move, I'm still anticipating that this whole thing is still corrective in nature, just taking a different shape and not being a WXY pattern, if that makes sense. All right, let's switch back to the daily, and then I'll next look at the NQ. Then as always, crude oil, gold, and the dollar index as well. Alright, we had a similar thing here on the NQ. Also used a shift pitchfork tracking this move down to the downside. Same thing. Price perfectly touched this low red warning line for the first time. And this was prior to, we had this pitchfork prior to when we started the session, and it touched it perfectly. Also an area of confluence, strong rally back to the upside, and of course subsequent fail, strong decline again. Now the NQ's obviously been way weaker than the ES, although they pretty much always follow each other direction wise. The price structure might look a little bit different. For me on the NQ, similar thing. I don't think that we're done going down yet on the NQ, although it has been weaker than the ES, mostly to do with the bad earnings that came out of Silicon Valley, big tech giants that weren't doing so well as everyone expected they would. But in any case, we had this area where we thought support might step in. This was around about this time frame in beginning of October. Support stepped in, moved back to an area of resistance, which I should actually call just a resistance zone, which was about 11,500 to 11,660, give or take. Price moved into it once, twice, got rejected, moved low, and very nearly last week broke below the 13th of October's low. So that's what I mean by being way more weaker than the actual ES, but price made it back into the support zone again, and as now obviously tried to move higher again. So similar sort of thing. If you look at the 4-hour structure of this bounce we had to the upside, also potentially could have been a double zigzag. A, B, C, X, A, B, C. And then whatever this is, potentially a 1, 2, 3, assuming that, you know, this was the end of a correction. Similar, same thing on the ES, but now that price is actually overlapping like this, it might indicate that it is moving lower in some sort of a channel, if that makes sense. So again, very wary to say here whether we should be long or short here. I actually want to wait to see what happens with when all these votes are counted, as well as tomorrow's CPI data, and then relook at things where price might be during Friday's session. I think that should give us a good indication as to whether we ended in both the ES and the NQ a corrective move, corrective bounce, or the corrective bounce is still underway obviously, or we're actually just going to start seeing another strong decline again that could potentially be heading lower again on both the ES and NQ to complete that final leg to the downside. Again, I don't think that's going to be a quick event. It's probably going to take a good month or so, potentially into the first quarter of next year, if that does materialize. Okay. Next up, we're going to look at crude oil. Again, guys, any questions, let me know in the chat box there. I'll be more than happy to answer that for you. On crude oil, I used channels tracking this massive incline to the upside since prices went negative in, when was this? In April 2020. Now, these lines I had on my chart for a long time. We can see how prices went at these extremes when price reached, and this is now only looking at the December contract, sort of nearly close to the 120 level. Price failed at the upper channel line, moved lower, and then started respecting these lines extremely well, even all the way down to the downside. And I know there's a lot of lines on here. Maybe let me just get rid of these fib retracements. We seen a move lower, obviously earlier this year, move higher, nearly reached this high, and then this 5-way sequence that we were mostly interested in, that actually moved all the way back into this lower median line and also this lower channel line. This is what I call confluence between different angles. Whoops, I shouldn't be doing that. Let me just see if I can actually grab that a little bit better. No, there we go. Confluence area with a 5-wave sequence, and price consequently moved higher again. It then made it all the way back right into the center channel line again, found resistance, moved lower. In that stage we thought we might be dealing with a correction, and we might see another leg higher to potentially test these highs on the 10th of October. This little green zone is another area we identified using market geometry once again. I think it was also a 61.8 retracement, if I'm not wrong. Yeah, 61.8 retracement, where price found support and then moved higher. Now, I've actually had a zone up here around about 94.07 to 97.56, where I thought crude oil might actually reach, giving us a beautiful A, B, C, before the potential next move lower could start. But obviously now we had a strong decline, especially yesterday. But that being said, price did pip these previous highs was set on the 10th of October. I also mentioned that this potentially looked like a 5-wave of an A, B, C, and then we had this 1, 2, 3, 4, 5 wave sort of move to the upside. Very zigzaggy in nature, so that could have potentially been the end of this move, and we might now be seeing another decline to the downside. So our upside projections to some degree worked out really well. At least we got direction right, but price didn't really make it into that area. So it begs the question, are we still going to see another leg higher? We might know after today's crude oil inventories. Or are we, was this it, and we're going to see another strong decline to the downside? Right, so current support actually right at this lower 50% dash median line where price is currently at, although it has broken slightly below it, around 88.21. This line I can get rid of now. No, actually I'm going to move it. Should price move higher again, it might find resistance again at this center median line, sloping to the upside. Now you guys might ask why I'm using so many pitchforks. It's basically just to figure out the potential path that price might take. If you think you're dealing with a correction, I found that to a very high degree that your shift pitchforks work extremely well to find support and resistance. And I use these 3 anchor points when price will start moving higher, and we've been looking at various levels where potential resistance might step in. Quite often you'll find that at your center median line. It was rejected there once, and I think it was a week later. We said we need to see a break above what was sort of the 90.34 level. Price reached the center median line again, got rejected, and then subsequently moved higher and broke above it. So yeah, now it really is all about trying to figure out, was this the end of a corrective move? It might very well have been. I think my confidence that a correction has indeed ended will obviously really only become, should I say, I should become more highly confident if a correction has ended, if price were to break these lows on the 18th of October. Still very far away, but again, crude oil can move very fast, like we've seen, and a lot of the price action all these markets have been following during these volatile periods. So yeah, that's the levels on the upside, around about 91.46, let's call it 91.50, and to the downside, either at that median line that it's currently at, that dashed one, or potentially lower, reaching this lower median line for support and bouncing higher. There's also that long-term pitchfork that we're using to track this decline, slightly above that at about 85.62. So rather than actually putting too much lines on here, this might actually act support. A break below that should be a warning sign, in my opinion, that prices are going to target these lows. Let me just change that to green for support. So yeah, should price break, move back in here, close below it, first sign that this potentially could have been the end of corrective move, which will bring in range these lows at 81.25 and potentially even then challenge at a later stage these lows were set on, when was this, the 26th, 27th of September. Right, so that's what I'm looking at crude oil. I don't know if I mentioned it. So in the bigger picture, I think even if this isn't complete, and even if price does move higher, that it is only corrective in nature, that we potentially can see a much larger decline at a later stage. Gold, on the other hand, been much stronger than I anticipated. Although gold's also beautifully been following our projections to the downside. The main question is, since prices now obviously topped out on, when was this, August 2020, whether this entire thing was corrective in nature. I've been thinking that for quite some time. I did draw a nice clear chart here for you guys to have a look at, set on the weekly, giving you a bit of a bigger picture view of what I'm seeing. Thinking that what we're seeing here is a potential ABC expanded flat, where you have a 3-wave move, 3-wave move, and then 5-wave move to the downside. With this actual 5th wave of this 5 wave, so this one over here of this C wave, potentially traced out as an ending diagonal. Now this really begs the question, did this ending diagonal now already complete? It might have. I was still thinking that it could move lower. We're going to look at something else I've got on the chart here for you guys, on the one with the background. But also interesting, price also tested 1, 2, 3 times the 61.8 retracement from these lows that were set in August 2018 to obviously these all-time highs in August 2020. Pretty weird how gold actually likes turning around in sort of these August time frames. But anyway, 61.8 resistance been supports held as support, and that was pretty much all we had on the market geometry side of things. Now if you look at the pattern sort of behavior on gold, then our projections for most of this year was to the downside. But we thought that that 5 waves in the C wave potentially completed. No, I don't want to use that one. This one. 1, 2, 3, 4. 1, 2, 3, 4. Sorry, 5. Yeah, in July. We anticipate a strong move higher, and if price were to break above that area, that potentially could have signaled the end of this entire correction. And then we could see gold potentially move back to new all-time highs. That didn't happen. Price then obviously subsequently moved lower again, and that's why I'm saying that I'm thinking this was a potential 1, 2, 3, 4, 5 wave that might complete, and then we see a move to the upside. I was looking around about low projections of around about 1,563, let's call it 560. To about 1,590, let's also call it, let's say 1,600. Now price hasn't reached there and has now really given us a very strong bounce to the upside. This now begs the question, if this was or is the final wave, 1, 2, 3, 4, did it end here and we're now going to see that? Or is this just a 1, a 2, a 3? Now the 4th wave is not really done yet, and then we get a 5th wave, and then it ends much later, the end of this year, perhaps first quarter of next year. So that remains to be seen. That being said, we did identify this resistance zone that price basically tested, when was this, last week, and then on Monday again, which lied between 1,679, let's call it 1,680 to about 1,693, where price is now just straightly, boom, way bang through it to the upside, busted through it. So that now begs the question, is this still corrective? We're just getting a higher retracement against this wave and then another move to downside, or has that larger correction actually ended already? So I'm not going to delve too deep in gold today. I think our answer should be given if price were to break this previous area of market structure strongly to the upside, then I'll become more confident a correction in the larger picture already ended. Otherwise, another decline from here below this area again potentially signal that we're still on the right path to potentially see lower prices in gold for the year, and then only at a later stage see the end of that larger corrective, or should I say my proposed correction end at a later stage. So that's what I'm thinking in gold. And lastly, let's quickly have a look at the dollar index. I'm going to get rid of all these lines so you guys can see what I'm talking about here. Let's keep those on there. I don't have live data for the dollar index. I do have end of day data updating daily, but I've set this to a weekly time frame similar to what I've got on crude oil channels that I projected to the upside, running at the same angles. Again, these channels been on my charts for a considerable amount of time, and they're still working really well. I mean, these anchor points we use for the for these channels were taken prior to 2019. Although I didn't draw these in 2019, I only drew them in 2020. I used those historical anchor points, and we can really see how well price respected. In April 2020, that upper channel line moved all the way down here into Jan 2021, moved up, support again, and bam, went straight back upwards. Now we've been watching this sort of area on the upside around 114.46 to 116 sort of an area for potential resistance. And how I got that is similar thing I do always, is find confluence between different angled market geometry lines, in this case that upper channel line, and also this upward sloping green upper median line, which in this case is not a shift pitchfork, it's a standard Dr. Alan Andrews pitchfork, or Alan Andrews pitchfork, however your platform might call it, or however you used to call it. But in any case, price moved right into that upper median line and it got rejected to the downside. So again, obviously the dollar has been influenced massively by these interest rate hikes, as it obviously would do. But you know, is all of this now just corrective in nature? Is pretty much all I want to say. And if it is, then I think strong support would lie between 106.5 to about 107.5, which is again just an area of confluence between the center median line of that standard pitchfork sloping to the upside and the center line of a channel also sloping to the upside, although at a different angle. So that might be a sub area of support. And then we see another move higher. Price has not yet reached that upper median line. This is why this actual resistance area seems so large, because it basically encompasses both the upper channel line, this blue line, and the upper median line of a green pitchfork. So this, I think, is still corrective in nature, although it can move lower into this area. But again, perhaps after tomorrow's CPI data, we will have a better idea if price is actually going to move towards there, or we're going to actually see another move into the area, which will update at a later stage again. Of course, obviously, these lines are sloping upwards, meaning that the zone will potentially get larger. And then only at a later stage see a much, much deeper corrective move. So, yeah, obviously with the dollar index also moving a little bit lower now, obviously gold started bouncing a little bit higher. But then again, like I said, I'm not going to read too much into things. I think we'll have a much better picture as to where most of these markets will move towards after tomorrow's CPI data and those figures when they are released. So we'll touch base again on Friday, and that pretty much concludes the session and the analysis side of things. If there are any questions, like I said before, please do ask them. If you do miss any of these sessions, you want to catch up, they are recorded, so they'll be available on our Ninjacators YouTube channel. So you can always go and view that there if you wanted to. And yeah, that's about it for me today. If there's no questions, guys, then I'll just call it quits for today, and like I said, I'll be back again on Friday, same time. Cool, doesn't seem to be any questions at the moment. Thanks very much for watching, guys. As always, have a fantastic rest of your day, and I'll see you back again on Friday. Until next time, take care and goodbye.